Hello, everyone. Good afternoon, and welcome to today's webinar about SPAC, the offshore perspective for in-house counsel. Today's webinar is hosted by in-house community and co-hosted together with Maples Group. Now, it's my pleasure to introduce Matt to you. Matt is a partner and head of corporate Asia of Maples Group. He specializes in advising financial institutions, publicly listed and private companies, asset managers, and promoters on mergers and acquisitions, SPACs, private equity, joint ventures, reorganizations, corporate governance, and capital markets, which include initial public offerings, secondary offerings, and preferred share financing. Matt also has significant experience in advising on the establishment, structuring, and restructuring of offshore investment funds at all stages of their life cycle. Hi, Matt. Good to see you.
Rahul, good to see you too. Thank you
Wonderful.
very much for that kind introduction.
My pleasure. Thanks very much, Matt. And if you want, you can now start sharing your screen and move forward with your presentation.
Thank you very much. Thank you very much, Rahul, for that introduction, and also to in-house community for the opportunity to speak to you all today. And thank you all in advance for your time this afternoon. I look forward to being able to share with you a broad overview of SPACs, and there's a few points to get through today, and I'll do my best to make it as informative and as efficient as possible for you. Just a couple of quick things before we start. Firstly, for those of you who are very experienced in operating and running SPACs, this presentation is very much intended to be a introductory overview. So I don't want to waste your time. If you are one of those people, you might find it a little bit too introductory for your taste. So just in case that's you, rather than you sort of wasting your time for a few minutes before realizing what the presentation is, I just wanted to tell you that right at the outset. The second thing is, as Rahul said, we'll be taking some questions at the end. I'll do my best to answer all the questions provided, but in case we do run out of time, please do feel free to email me or call me, and Rahul has my contact details, and these will also be provided at the end of the presentation. So I think just with all that said, what I'll now do is move on to my presentation. So just to start off with, I would like to just give you a little bit of an explanation of the Maples Group. We are a full-service law firm and also a fiduciary services firm. We have professionals in a number of countries. The purpose of where the sorts of services that we provide, we advise on the laws of the Cayman Islands, British Virgin Islands, Luxembourg, Ireland, and Jersey. And we provide fiduciary and fund administration services in a number of these jurisdictions. I won't say anything else, but effectively, we are very much focused on servicing capital markets in Hong Kong, Singapore, and the US, and we've been working with SPACs for the past 2 decades. So in terms of, I guess, my experience with SPACs, I've been practicing for over 21 years in private practice. I started working with SPACs in 2006 and have been effectively involved with the SPAC market since that time. And there's been quite a significant evolution of the SPAC market, which you'll see as we go into this presentation. So just before we get into SPACs, I just would like to give you a little bit of an update of the Cayman Islands and the British Virgin Islands, because these jurisdictions are commonly used as domiciles for SPACs. And I thought it would be helpful to just give you a little bit of background as to both jurisdictions before we actually head into the SPACs themselves. So if we start off with the Cayman Islands, as you can see from the little diagram here, we have it's a British overseas protectorate that's located about an hour's flight south of Miami, 3 hours south of New York. 1 hour's flight to Jamaica, 40 minutes to Cuba, and it's very well positioned in terms of the North American market, and so has benefited from servicing its proximity to the US, and as a result is the premium offshore jurisdiction of choice for US capital markets transactions that are not purely US domestic focused transactions. The British Virgin Islands is located a little bit further away. Has become the world's #1 jurisdiction for offshore companies. The BVI business company is very, very popular. There are over 450,000 active BVI business companies registered today. So in terms of the number of BVI business companies out there, there's no other jurisdiction that has that number of companies. The Cayman Islands has approximately 110,000 active companies, and it's very much been modelled as a jurisdiction focused on investment funds and servicing the investment fund ecosystem, and also servicing the US capital markets. And now, and certainly over the last couple of years, couple of decades, has been focused on servicing capital markets mandates in Hong Kong, Singapore, and the rest of Asia as well. So going on to SPACs, what is a SPAC? So effectively, a SPAC is a what we call a special purpose acquisition company, sometimes called a blank check company, sometimes called a cash box company. Effectively, a SPAC does not have any assets. The only asset that it has, if you could call it that, its management team. And effectively, the way that it's set up and it's structured is that the SPAC will be constituted with a management team with a track record, hopefully, and with a mandate to actually go out and using funds that are raised from investors in an IPO to actually use those funds to acquire a target business and to complete the acquisition of that target business under a process called the de-SPAC transaction, or sometimes called the business combination as well. So in terms of the investment proposition for investors, effectively what happens is that the SPAC is set up as a plain company, vanilla Cayman Islands company, or a company in the jurisdiction in which the SPAC is to be set up. It will be constituted with an initial board of directors and a single shareholder, or maybe a handful of shareholders. Usually it's only a single shareholder, though, that would act as the sponsor of the SPAC. The sponsor of the SPAC is responsible for establishing and running the SPAC, and what the sponsor will do is effectively support the SPAC until such time as the SPAC completes its IPO. And then we'll continue to support the SPAC until such time as the SPAC is able to locate a suitable target business within which to complete a de-SPAC transaction. The monies that are raised in a SPAC IPO are not directly held by the SPAC. They're actually held in a trust account or an escrow account, which is administered by a professional third-party custodian institution, and those proceeds are held into that account and may only be released at a point in time where the SPAC actually completes a de-SPAC transaction, or if the SPAC is not able to locate and complete a de-SPAC transaction within its allotted lifespan, then at that point in time, those monies will be returned to the investors by way of a redemption of their shares prior to the SPAC liquidating and winding up itself. For Hong Kong SPACs, the custodians will need to comply with Chapter 4 of the Unit Trust Code. And certainly for custodians who are administering escrow accounts for SPACs, they're required to comply with the relevant rules of the particular jurisdiction where the SPAC is being launched and also where it's been listed. So there are different rules that apply to SPACs that are listed in the US, whether it's on NASDAQ or the New York Stock Exchange, Hong Kong, or Singapore. For this presentation, I'll be looking mainly at 3 SPAC jurisdictions, being the US, Hong Kong, and Singapore. There are other SPAC jurisdictions. For example, the London Stock Exchange permits SPACs. Euronext permits SPACs. There are other jurisdictions that permit SPACs as well, such as the Australian Stock Exchange. The UAE recently amended its governance code to allow SPACs to be listed, and other jurisdictions are following suit. But just for the purposes of today's presentation, we're keeping a fairly narrow focus, which will be US, Hong Kong, and Singapore. So why do people choose to pursue a SPAC? And SPACs have actually become very popular over the past couple of years in particular, and I'll be later in this presentation taking you through some of the numbers so that you can actually see the trajectory to see how popular the growth of SPACs has been. But effectively, there are some key reasons why SPACs have become popular. One of the reasons is that it allows investors access to fairly early stage venture capital investment opportunities that may have previously only been available to high net worth investors, private equity institutions, and hedge funds. What we have also seen is that it provides investors with an opportunity to participate in investment strategy that is undertaken by investment teams with a proven track record. So what we have seen, particularly over the last 2 years, is that there's been a number of Asia-based asset managers who have successfully set up SPACs, essentially in the US, but a number of those managers are now also looking to Hong Kong and Singapore now, potentially launch SPACs on the Hong Kong and Singapore exchanges. And these managers have been very interested in pursuing these SPAC opportunities because it gives them an ability to be able to fundraise outside of the traditional fund establishment and fundraising structure. So, for example, if you're a private equity manager and you're looking at raising funds by way of the traditional limited partnership structure, and effectively going through the negotiation process with investors and looking to close your fund. That's a process which, of course, is a very well-trodden path. It's a process that a lot of investors, sophisticated investors, institutions understand. But it doesn't necessarily allow you to access the vast pool of investor capital that regularly invests into the major securities exchanges, nor does it allow you to access investor capital from retail investors. In addition, if you have the ability to launch a IPO on a major securities exchange, you are in a position to actually promote your brand, to educate people about your team, about your investment track record, about your credentials, and reach a wider audience. And so we've seen a number of Asia-based investment managers actually do that by listing SPACs on NASDAQ with the New York Stock Exchange, and so doing so, actually growing their profile from a profile that was very Asia-focused to becoming something that's global, because the investor pool of capital on the US exchanges in particular is global. It also is potentially a much faster and less expensive way of pursuing a public company listing rather than going down the pathway of a traditional IPO. So a traditional IPO, if you're following, and it depends upon the particular exchange where you're looking to list, and I'm speaking in very generic terms here, but the SPAC process, if we look at the US SPAC IPO process, is actually much faster and less expensive than doing a normal IPO on a New York Stock Exchange or NASDAQ. So you can launch a SPAC IPO in 3 to 4 months. And we saw that happen with a number of SPACs over the last couple of years as promoters and sponsors sought to take advantage of very favorable market conditions at that point in time. In addition to that, the expenses associated with taking a company public were significantly less. So fees that were paid to, say, the underwriters on a traditional IPO, the fee structure was actually a lot more favorable for a SPAC IPO. That's just an example. Similarly, the fee structure for other service providers involved in servicing a traditional IPO was generally lower. We also saw in the US enthusiasm for the SPAC model, particularly from areas like Silicon Valley, where you had a lot of entrepreneurs, tech founders, operators of businesses which are looking to disrupt the way that we do things, who saw the pathway to an IPO via a SPAC as being a great way to disrupt the traditional IPO model. Of course, some additional reasons for why SPACs have been popular. If we go back to the Hong Kong experience, and this is a very fluid situation at the moment where we are seeing a number of businesses, Chinese businesses that have listed in the US, experiencing difficulties as a result of changes in regulations, both on the China side and also on the US side. We're seeing a number of those US listed Chinese businesses potentially looking to delist in the US and do a listing in Hong Kong or potentially mainland China, i.e. on the Shanghai Star Market or one of the other bourses. In terms of new IPOs, what we are seeing is that there is a trend away from US listings for a number of Chinese companies who are very keen to explore a pathway to listing on the Hong Kong exchange. And so certainly for some sectors where the Hong Kong exchange has indicated that it is looking to increase the number of public companies listed on it, such as the biotechnology sector, where the exchange has actually amended its listing rules fairly recently to permit biotechnology companies to list, have it by way of an easier pathway under Chapter 18A. Those sorts of companies will be the sorts of companies we would expect to be potential de-SPAC targets for SPACs which are listed in Hong Kong. The fact that we've also experienced a period of record low interest rates with up until fairly recently, no significant market volatility, and I kind of say that in inverted commas because, of course, there is always market volatility, but certainly I think prior to what we've seen over the last couple of weeks in particular, 2021 outside of the pandemic was a very, very strong year for capital markets, and SPACs we're seen as a potentially safe way for some investors to potentially house their cash until such time as they decide to do something else with it. So investors sought to put their cash into SPACs, knowing that the cash would be held in these trust accounts, and also knowing that they could elect to redeem their investments in this trust account at the time that a SPAC either decides to pursue a de-SPAC opportunity or is forced to liquidate because it's run out of its lifespan. So this was another reason why we saw SPACs being quite popular. We also saw SPACs being popular for some investors because they provided an opportunity for those investors to have access to a particular niche sector. And we saw the rise of the celebrity SPAC, where we had Shaquille O'Neal, we had some actors look to indicate that they would be setting up SPACs to invest in the basketball teams, basketball sector, entertainment sector, that kind of thing. And so that was popular for certain segments of investors. It's worth noting, though, that those sorts of SPACs have completely died off, and as I think the market had a bit of a reality check and realised that just being a good basketball player doesn't necessarily mean that you are going to be a good SPAC operator. The other last sort of point which I'll highlight, and there are other points to mention here, but one of the other points was that SPACs and the opportunity to enter into a DSPAC provides management and boards of companies with an ability to be able to partner with a management team with a strong operating track record to benefit and to help grow their business. And so we saw that occur with the Grab SPAC, which is the biggest SPAC in history. And the part of the reason why Grab elected to go down the pathway of a merger with the SPAC and a listing on the New York Stock Exchange was that they were very keen to partner with the management team led by Altimeter Capital Management. And they've made a 3-year commitment with Altimeter, and they're benefiting from the strategic advice and input that Altimeter are bringing as part of their contribution to that merger. So there's a number of different reasons why SPACs have been quite popular. In terms of the ownership of SPACs, it's worth noting that the structure varies depending on where your SPAC is listed. So what I would like to do is just give you, first of all, an overview of the structure for US SPACs, and secondly for Singapore, and then followed by Hong Kong. So for US SPACs, the way that the structure is set up is that you would have the SPAC company set up with a dual share class structure, Class A, Class B shares. The Class A's are the shares which are offered to investors under the IPO. The Class B shares are offered to the sponsor or held by the sponsor or sponsors. They're effectively the same as the A shares, except that the sponsor would have some limited rights to appoint and remove the directors of the SPAC board, which would apply until such time as the SPAC moves to complete a de-SPAC transaction. And the reason why that is the case is that the sponsors don't want to go to the trouble of setting up a SPAC and going to the trouble of finding a target and doing all that they want to do to actually make the de-SPAC a successful transaction, and then potentially get voted off the board by other shareholders at the last minute. So they want to make sure that they're in the driver's seat until such time as the de-SPAC is completed. That's why that voting right is there. The B shares are not publicly traded shares, and effectively it's usual for the sponsors to hold a 20% voting interest in the SPAC until such time as the de-SPAC is completed. The way that the B shares are paid for is that there is usually a contribution of US $25,000, which is made initially to constitute the initial subscription of shares by the sponsor, and that is something that is also underpins a support arrangement which the SPAC and the sponsor enter into by way of a contractual agreements, and where the sponsor effectively agrees to stand behind the SPAC and guarantee expenses that the SPAC incurs up until the time that the SPAC goes to an IPO. Upon the consummation of a de-SPAC transaction, the B shares will be converted into A shares, and ostensibly the sponsor would be sitting holding the same shares, same types of shares as the other investors. The other point to mention here, and is just you may have noticed, or some of you may have noticed on US SPAC transaction, is that some of SPACs, US SPACs, have a preference share component. We don't see preference shares issued under a SPAC IPO. They may occur on a de-SPAC, but typically it's just an A or B share capital structure. For Singapore listed SPACs, the structure is simpler. It's just the same class of shares. And so rather than an A-B class share capital structure, there is only the one class of ordinary shares, and that class is held both by the investors and by the sponsor. The Singapore requirements are a little bit different in the sense that Singapore does allow the sponsors to hold a greater proportion of shares, so that the sponsor can maintain effective voting control of the SPAC until such time as a de-SPAC transaction occurs. It's very interesting to see what's happened with Singapore. So Maples acted on the first Singapore-listed SPAC, Vertex Technology Acquisition Corporation, and that listed in January together with two other SPACs. This was the first wave of Singapore SPACs that were listed on the Singapore Exchange. There is a second wave of Singapore SPACs that are due to be listed fairly imminently. Again, that is subject to market conditions. And with the current situation being what it is in Ukraine and elsewhere, this has, of course, made things very difficult in capital markets at the moment. So a number of SPAC IPOs are on hold. And we are aware that a number of Singapore SPAC IPOs are on hold until market conditions improve somewhat. But we do expect that there will be quite a number of Singapore SPAC IPOs, as we've certainly been seeing a lot of interest in these IPOs. In terms of a Hong Kong listed SPAC, it's a little bit similar to the US in the sense that there is an A and a B share class capital structure. Again, the Bs are held by the sponsors and the As are the shares that are acquired by the professional investors. It's worth noting that the Hong Kong SPAC regime is different to Singapore and the US, Euronext and London, and other major SPAC regimes in the sense that investors in Hong Kong SPACs may only be permitted if they are professional investors. So retail investors cannot directly invest into Hong Kong SPACs. So what we have seen, and that's kind of changed a lot of the characteristics for Hong Kong SPACs as opposed to the SPACs which are listed on other securities exchanges. In terms of the structure of a Hong Kong SPAC, the A and the B share class is similar to what you would see for a US SPAC. For Hong Kong SPACs, the B shareholders or the sponsors also have a weighted voting right to effectively appoint and remove directors of the Hong Kong SPAC until such time as that SPAC completes a de-SPAC transaction. For the same reason as the holders of the B shares for a US SPAC have the ability to appoint and remove directors to maintain that control of the board until a de-SPAC occurs and to ensure that they are not removed. Now, in terms of the situation for Hong Kong SPACs, the new listing rules permitting Hong Kong SPACs only came out at the beginning of this year. But since that time, there's been quite significant interest in Hong Kong SPACs. So as at today's date, there have been 8 applications formally filed with the Hong Kong Stock Exchange for Hong Kong SPACs. We acted for the first Hong Kong SPAC that filed its first application with the Hong Kong Exchange, and that has certainly led the market in some respects. So we were aware that a number of other SPACs have kind of followed what has been done on that deal. No Hong Kong SPAC has listed as yet. A number was scheduled to list this month and next. But again, this is all subject to market conditions. So once market conditions improve, then we expect that the first listings will occur. We're also aware of a number of Hong Kong SPACs which have not filed their application for the exchange, but we expect that will occur in the coming weeks. So this is going to be a very good and very interesting area of capital markets in Hong Kong, and it's great to see. So I will just stop here because we've now got an interactive question which has been asked. So Rahul, if you're able to put up the first question for the audience. So we'll give this about 50 seconds to a minute to allow folks to put their responses in, and then we'll see what sort of answer we get.
Right, Matt, can you see the results on your screen?
I can. Okay, so fantastic. So what we can see is that approximately 66% of you have an interest in investing in SPACs, 34% of you don't. 40% have an interest in investing in US SPACs, 11% in Singapore, 37% in Hong Kong, and 11% in other markets. So that's really interesting to see that response. So thank you very much for that. we'll have a couple more questions for all of you later on as we progress. So moving on to the, other components of a SPAC offering, it's important to talk about the role of warrants and units. So warrants are a form of contractual rights that entitle the holders to receive a certain proportion of shares or part of a share in a SPAC. Units are, again, another form of contractual rights, which effectively bundle shares and warrants together. Being contractual rights, the way that they're established or created is by way of contractual documents, warrant instruments, warrant agreements, unit agreements, and the terms and conditions in those documents will set out how the warrants and units are intended to operate. I guess in all of the SPAC IPOs, warrants are a key part of the structure because the way in which they are structured in terms of when they're issued and when the sponsors has the ability to receive warrants, and of course when the investors have the ability to receive warrants, is going to a large extent provide the economic upside to the investment in the SPAC. So it's not just enough to derive a capital gain in terms of potentially the SPAC share price trading above, say, its issue price. It's also imperative to derive a capital gain from additional shares that are issued through the exercise of warrants, either under the IPO or under a de-SPAC transaction. And this is really where everybody makes their money on a SPAC IPO. Now, in terms of the way in which, or the calculation, or the formulae, or the methodology by which people get shares in the warrants instruments, there's various ways of setting this out. And if you were to speak to any of the major law firms who regularly work with SPACs, they all have a certain approach or preference for documenting how this is to be done. There is no one-size-fits-all approach. And again, it also depends upon the type of SPAC, the sort of management team that you have, and what sort of reception you think investors are going to have to your SPAC offering. So, for example, those management teams with a strong track record and a lot of investor interest in a SPAC IPO will be in a position to negotiate more favourable warrant terms than those SPAC promoters who maybe don't have the same pedigree. In terms of the way in which warrants and units are regulated and structured, there are a number of very specific, very, very technical, very complex rules that apply. There's tax considerations to note. There's accounting considerations to note. The way in which warrants are developed can mean the difference between whether or not they're treated as equity or liabilities for accounting purposes. Also, there's rules relating to how they're structured and how they can be issued and dealt with under the listing rules and policy pronounced by the regulators in all of the jurisdictions in which SPACs are listed. So if you are looking at setting up a SPAC and you're looking at your warrant structure, it is critical to get early advice and expert advice, not only from your tax, accounting, and legal advisors, but also your financial advisors as to how whether they work, and really stress testing those warrant terms, because they are going to underpin how well, if you're, say, a sponsor, how well you're going to do out of the SPAC, but also if you're an investor, how well you're going to do out of the SPAC if it meets certain milestones. Now, in terms of the, and that's, apologies, that was a very, very brief overview of warrants and units, and I appreciate that was brief, but it is quite a complex area. So what I would like to do is just go on to the next big consideration, which is the business combination and de-SPAC transaction. Again, if you've got any specific questions on warrants, units, I'm very happy to take those later or separately outside of this presentation. Now, in terms of the business combination or de-SPAC transaction, as I mentioned, SPACs have a certain lifespan to actually find a target business. It's generally 2 to 3 years, usually 2 years. Sometimes we've seen it lower than that. Sometimes it's 18 months. And then there's an option to potentially extend the lifespan. Maybe it's another 3 months, maybe it's a 6 months period upon a shareholder vote, sometimes upon a director resolution. It depends on how the SPAC is structured and what its constitutional documents say. For a Cayman company, that would be its memorandum and articles of association, and also the offering document of the SPAC itself, the prospectus document, the offering circular. So if the SPAC does not find a target business within that lifespan, then it must liquidate and wind up. It does not have a choice. It cannot stay alive unless it follows an extension mechanism, but it cannot stay alive indefinitely. It will only have a couple of times opportunities to potentially extend its lifespan. And again, if it doesn't find a target business within that time frame, it must liquidate and wind up. So these are not a situation investments, or these company structures are not designed to go on indefinitely unless a de-SPAC deal is found and completed. In terms of the de-SPAC deal itself, these are very complex, very significant M&A transactions, and they will not go ahead unless the shareholders pass an ordinary resolution or majority resolution to approve the de-SPAC transaction going ahead. So if that shareholder approval is not obtained, the de-SPAC deal cannot proceed. So it's very, very important for a board of a SPAC to, once they find a de-SPAC, to ensure that they consider that it's in the best interest of the shareholders to proceed with that de-SPAC, but also that there are compelling reasons to actually proceed with the de-SPAC, and that this is going to create shareholder value. And this is something that they can explain to shareholders in the proxy statement, notice of meeting materials that they will send to shareholders, explaining to them the de-SPAC transaction, all of the circumstances surrounding the deal, the pros and cons, and leaving the shareholders themselves to actually consider whether or not it's something that they want to vote for. In terms of what shareholders can do, shareholders have the options to do a couple of things. They can vote for the de-SPAC transaction, and they can elect to be part of the de-SPAC company, successor company, or target business once the de-SPAC transaction has occurred, and in which case the monies that are attributed to their shares that are held in the trust account will be deployed towards that transaction, and the shareholders will become owners of whatever the post-business combination structure happens to look like. And I'll talk a little bit more about that in a moment. Shareholders, if they don't like the deal, can vote against it and elect to have their shares redeemed for cash, and then they can just walk away with their cash, and that's that. You can also have shareholders who vote for a deal but still elect to redeem, and the reason why that requirement was brought in was that quite a few years ago, the only way you could redeem your shares was if you voted against a SPAC deal. This was in the US context. What that meant was that we had a number of SPAC deals that were voted down. So the rules were changed in the US to allow shareholders to vote for a deal but still redeem their shares. So they got the best of both worlds, and that enabled a number of de-SPAC transactions to proceed. So this is the case in terms of the choices that are available to shareholders for SPACs in Singapore and Hong Kong as well. Now, in terms of the shareholder vote to approve a de-SPAC, that's not the only important resolution to obtain. It will depend upon what is being contemplated as part of the de-SPAC transaction. So typically, what you will see is that the target business will be located in a particular country. Let's say, for argument's sake, it's Delaware in the US. In that case, it may make sense let's say, for argument's sake, the SPAC is a Cayman company. So the Cayman company may look to migrate to Delaware and become a Delaware company. And then following that migration, may look to take some corporate actions. It may look to change its constitution to be a Delaware-friendly constitution. It may look to appoint new directors there will be maybe adopt some new corporate governance policies, pass a whole range of actions that would be appropriate for a company following a merger. So in that case, what you might see is shareholders of the SPAC being presented with a number of resolutions to consider, not only just the resolution to approve the de-SPAC itself, but a number of these additional resolutions which would all need to be passed in order to enable that deal to proceed. The structures of de-SPACs vary significantly because de-SPACs can be done theoretically in any country in the world, depending on whether or not a target business is attractive or not, and will be subject to different tax, regulatory considerations. And these can be very, very complex structures. So this is something where there is no one-size-fits-all approach as well. For a SPAC investor, they can be quite difficult to actually understand and work out whether or not a deal is the right one or not. The proxy statement, notice and meeting materials can be quite significant in terms of number of pages, complexity, number of the disclosures. So again, if you're a SPAC investor, this is something where you'd want to get your advisors to potentially give you their views on whether the investment is a worthwhile or not, and how you should elect to utilize your redemption rights. It's also worth mentioning here the role of the PIPE. The PIPE is short for private investment in public equity financing. So typically what we will see on SPAC IPOs and SPACs that are looking to complete a de-SPAC is that the funds that they raise in the IPO are not going to be sufficient alone to enable a de-SPAC transaction to occur. And so it's necessary for the SPAC to source additional funding to enable it to be able to complete the de-SPAC. This is where additional private investment comes in. And so that private investment might be additional contributions from the sponsors, affiliates of the sponsors. It could be a fundraising which is conducted by financial advisors, underwriters supporting the SPAC. It could be any number of different sort of ways of fundraising behind the scenes. But effectively, whatever the shortfall is to enable the deal to get done is usually looked to be addressed by way of PIPE financing. So these are, again, very, very significant transactions that occur prior to a de-SPAC transaction. The PIPE financing arrangements need to be put in place to prior to a de-SPAC deal to enable that de-SPAC to go ahead. And again, this is something where there's been some fairly recent, particularly over the last off the top of my head, 8 to 9 months, particularly if you look at the US SPAC experience. PIPE financing has been increasingly difficult to obtain given the number of SPACs that are looking for de-SPAC targets and the ongoing market volatility. So PIPE investors, in return for contributing their PIPE financing, they will receive discounted shares, warrants, other benefits under either de-SPAC goes ahead. So it's certainly a way for PIPE investors to potentially receive a greater upside in a de-SPAC situation than the original SPAC investors. But their involvement is necessary if a de-SPAC is to occur. We've also seen that because of the redemption options that are available to investors, i.e. they can elect to redeem all of their shares and vote in favour of a SPAC deal going ahead, that the involvement of a PIPE is critical sometimes to enabling a de-SPAC to go ahead, because sometimes we've seen very, very significant redemptions, in excess of over 80% of the proceeds in the trust account, which may mean that the de-SPAC deal would be killed off if there wasn't an ability for the PIPE investors to potentially meet that shortfall. The next slide that I'd like to just mention in terms of the PIPE financing, and I'm really talking, when I'm talking about PIPEs, I'm really talking about the US experience here. At present, there are estimated to be over 500 SPACs looking for de-SPAC targets at the moment. And there's been quite a lot of volatility in the PIPE financing market. I was involved recently with a couple of very significant de-SPAC deals where the sponsors had to make a very significant contribution in addition to the PIPE investors in order to enable those deals to go ahead, because the expectation and the indications were on those deals that investors would be submitting significant redemption requests north of 70% on those deals. SPACs have been, I guess, primarily developed in the US, and so the US remains the home of SPACs, and as such, it should be no surprise that Delaware is the home of SPACs in terms of the number of SPACs that are domiciled in the US, and Delaware is certainly a place where they're all domiciled. If you are looking at a US-focused SPAC, which is looking at buying a target business in US, then you're going to be looking at setting up a Delaware SPAC. However, if you are looking at potentially looking for a target business outside of the US, and you've got investors based outside of the US, then the Cayman Islands has become the default choice and is the next most popular jurisdiction for SPACs. Due to the flexibility of the Cayman Islands exempted company structure and the fact that you don't have things like capital maintenance rules or stamp duty on share transfers and some of the other benefits that apply to Cayman Islands companies, Cayman Islands have been chosen as the issuing vehicles for SPACs on not only the Singapore exchange but also the Hong Kong exchange as well. And it's also worth noting here that on the Hong Kong exchange, over, I think it's roughly 60%, I think it might be a little bit over 60% actually, of the companies listed on the Hong Kong exchange are Cayman Islands companies. And if you look at the last decade, over 80% of new listings on the Hong Kong exchange have been Cayman companies. And again, it's due to the reasons that I just mentioned. BVI is also an option for SPACs, although it's not as popular. And the general preference of promoters and sponsors when setting up a SPAC is to follow the well-trodden path. And so we haven't seen BVI used as much as Cayman. There are some BVI SPACs in the US market. We haven't seen any BVI SPACs put forward for Hong Kong or Singapore at the moment. It's too early to tell. That's not to say that wouldn't happen in the future. Technically, it's possible, but we expect that Cayman will continue to be the default choice for both those exchanges. In terms of Europe, there's ongoing interest in Euronext and listings and London SPAC listings, and again, other markets are interested in implementing SPAC structures. So, in terms of the number of SPACs, I think I missed a slide. I just wanted to take you through the sort of evolution of SPACs. So, as I mentioned, I've been acting on SPACs since 2006. And I've seen the evolution over the past couple of decades. It's been very dramatic. So we can see that in 2016, there were 13 US SPAC IPOs. This subsequently increased to 34 in 2017, 46 in 2018, and 59 in 2019. And that's when things really, really took off. And the game changer really in terms of what happened between 2016 and 2019 was that private equity started to get involved in sponsoring and setting up SPAC structures. And so that attracted a lot of interest from other players on Wall Street and institutions which up till that point had not really used SPAC structures to facilitate investments in M&A. So in 2020, we saw approximately 248 SPAC IPOs. We saw $83 billion worth of SPAC IPOs closed. We also saw 64 de-SPAC deals done with approximately $89 billion in deal value. 2021 was, of course, a massive year for SPACs. We saw 613 US SPACs that priced and closed their IPOs with an aggregate value of approximately $162 billion. And we are aware that there are a number of SPACs that have yet to be launched this year. We also saw more than 200 de-SPAC deals completed with more than $470 billion worth of deals done. To date in the US have been, and I'm just talking about this year, 2022, there have been 44 US SPAC IPOs completed, approximate deal value of $8 billion. and another 171 US SPACs have filed for an IPO. That includes those that filed for an IPO last year but haven't yet to launch. In addition, there's been 22 de-SPAC deals thus far this year that have closed with an aggregate deal value of 33 billion. So this is sort of very interesting, and of course the fact that there are so many US SPACs out there looking for de-SPAC targets has meant that a number of them have come to Asia and are looking for opportunities, and will be competing potentially with Singapore and Hong Kong listed SPACs once they are launched. So in terms of setting up a SPAC structure, I've set out some points here, and I am conscious that we're sort of rapidly running out of time, but I just wanted to provide you with some points to kind of keep in mind if you are looking at setting up a SPAC. And these are some tips there. It's not an all-encompassing comprehensive list, but really just the key thing is to, if I could stress it to those who are contemplating setting up a SPAC structure, is make sure that you've got a good management team who are experienced, and you've got a good team to support the management team, not only in the SPAC IPO launch, but also in the location and execution of a de-SPAC transaction. And the whole point of doing these SPAC IPOs, if you are a promoter, is of course to build a track record and do SPAC number 2, number 3, number 4. So you want to make sure that you've got a good team in place to be able to develop those that line of business. So I'd like to just pause now to ask the audience their views on the second interactive question. Over to you, Rahul. Again, I'll be very interested to see everyone's views on this second question. Okay, great. So we can see the responses here, and 40% of you said that in terms of what is most important for a SPAC, a strong management team. 8% said a reputable board and advisory board members, and 18% said a strong investment track record, and 34% said a specific investment focus aligned to investment track record. So, great to see those responses, and yeah, certainly agree that, certainly a strong management team and a specific focus is critical. So in terms of the remaining slides that I have, the next one was just a kind of an indicative slide to walk you through the process for a US IPO. It's a broadly similar process for a Singapore SPAC and for a Hong Kong SPAC, albeit that there's some changes to terminology and some additional procedures that need to be followed. But really, this was just designed to give you a sort of an idea of the sorts of processes that would need to be followed if you are looking at following a SPAC IPO timeline in the US. And that's just taken from a deal that we acted on last year. I thought that would be interesting to some of you. So the last couple of slides that I have was really just a kind of a bit of a sort of a walkthrough of some of the key features of Singapore SPAC IPOs and also Hong Kong SPAC IPOs. I'm running out of time, so I won't go through it line by line. I'll leave you to take a look at that at your leisure. And of course, there's been quite a number of publications put out by various folks on the various points here. But just really to give you a bit of an overview of some of the key features of the Singapore and Hong Kong SPAC products. It's suffice to say that we expect that both of these products will be very successful, and we're seeing a lot of interest in both of them. So the last interactive question that we have is, Rahul, could I just ask you to pop that up very quickly for everyone before we close off? Bit of crystal ball gazing here, and just very keen to kind of,
sorry, Matt, the second and the third options are too long, so you might not be able to see them. The second option is continuing to evolve. HK and Singapore SPACs will grow in popularity, although the US SPAC market will not be as strong as 2021. And the third option is continuing to evolve. Hong Kong and Singapore SPACs will grow in popularity, and the US SPAC market will be better than 2021.
Okay, so I think everyone, so we've got 7% of you said declining, it will fizzle out. 60% of you said continuing to evolve, and Hong Kong and Singapore SPACs will grow in popularity, although the US SPAC market will not be as strong as 2021. I agree with that. That's my view as well. And then answer C, we had 33% of you said it'll be continuing to evolve. Hong Kong and Singapore SPACs will grow in popularity, and the US SPAC market will be better than 2021. So I think I was under strict instructions to close on the hour, so I think we've just run out of time for questions. But I just want to thank you all very much for your time, and I'm very happy to take questions separately.
Wonderful. Thank you very much, Matt. And I know we run out of time. We do have a few questions that have come in from the audience. But because we don't have any time, I'm sorry, we can't take these questions. However, what I'll do is we will share Matt's details via email to all the attendees today. And if you have any questions, I'm sure, Matt, you'll be very happy to answer them by email directly to the attendees. And also, if you have any, if you need a copy of Matt's slides for today, please email him directly. Like I said, we will be sharing his contact information separately via email. So thank you very much, Matt, for your very informative presentation today. And we'd like to also thank Maples Group, our co-host for today's webinar. So again, thank you so much for attending today's webinar. We hope to come back to you soon with further webinars about topics which you have mentioned as important to you. Have a great day ahead. And Matt, thank you so much again. Cheers. Bye-bye.
Thank you all for your time. Thank you. Bye-bye.
Bye.